So, you want to own Microsoft, not just a few shares, not enough stock to attend the annual shareholder meeting, not enough to brag that you're technically an owner. You want the whole company, every employee, every office, every patent, every data center, every Xbox, every Windows license, every copy of Microsoft Office installed on millions of computers around the world, every Azure server powering businesses across the planet. Everything. It sounds impossible. And honestly, it almost is. Because Microsoft isn't just another company. It's one of the most valuable businesses ever created. A company so large that if it were a country, its economy would rank among some of the largest in the world. Millions of businesses rely on it. Governments depend on it. Schools teach with it. Hospitals run on it. Banks secure transactions with it. Entire corporations would struggle to function for a single day without Microsoft software. Yet despite all of that, it started with one idea: put a computer on every desk and in every home. Now imagine this. It's 8 o'clock on a quiet Monday morning. Your private phone rings. The caller ID simply says, New York. You answer. On the other end is one of Wall Street's biggest investment banks. The voice is calm, professional, almost unbelievable. We've been authorized to contact a very small group of potential buyers. Microsoft is available. For a moment, you think it's a joke. It isn't. The board has agreed to entertain offers. The current shareholders are willing to sell. Every investment bank in the world has been placed under strict confidentiality agreements. The asking price? $3 trillion. Not 3 billion, not 300 billion, 3 trillion. More money than the annual economic output of many developed nations. Your advisors immediately begin running numbers. Banks from around the world start discussing financing. Governments quietly monitor the situation. Financial markets brace for what could become the largest corporate acquisition in human history. Everyone asks the same question: can it actually be done? The surprising answer is yes. If someone had enough money and regulators approved the deal, there is nothing stopping the purchase. Companies don't belong to founders. They belong to shareholders. Buy enough shares, and you own the company. Simple in theory, almost impossible in reality. But before you get too excited, there's something you need to understand. Because buying Microsoft isn't like buying a factory, or a hotel, or even an airline. Microsoft doesn't manufacture one product. It manufactures an ecosystem. Before a single dollar of profit reaches your bank account, you aren't responsible for keeping one business alive. You're responsible for keeping hundreds of businesses alive, all operating under one name: Windows, Microsoft 365, Azure, LinkedIn, GitHub, Xbox, Bing, Microsoft Teams, Copilot AI, Surface, enterprise security, cloud computing, artificial intelligence, gaming, business software, developer platforms, advertising. And that's before we even begin talking about the thousands of products most people have never heard of. Owning Microsoft isn't like steering one ship. It's like trying to steer an entire fleet through a storm, while the ocean itself keeps changing. Then comes another problem. Unlike a factory, Microsoft's most valuable assets aren't buildings. They aren't machines. They aren't warehouses. They're people. Imagine waking up tomorrow morning and realizing that your company's greatest assets walk out the front door every evening. Software engineers, artificial intelligence researchers, cybersecurity experts, product designers, cloud architects, executives, some of the smartest people on earth. None of them are owned by the company. Every morning, they choose to come back. If enough of them leave, the company changes overnight. A steel factory can replace a broken machine, replacing one brilliant engineer who helped build the future of artificial intelligence. That's much harder. Then there's something even stranger. Microsoft sells products you can't touch. No conveyor belts, no blast furnaces, no shipping containers full of finished goods. Its biggest products are invisible. Lines of code, cloud infrastructure, artificial intelligence models, digital subscriptions, software updates. Every time someone opens Word to write a report, joins a Teams meeting, stores files on OneDrive, builds software on GitHub, or powers a business using Azure, somewhere, Microsoft is making money, quietly, constantly, at a scale that's difficult to imagine, which raises an interesting question. If software can generate billions, why doesn't everyone become Microsoft? Because building software isn't the difficult part. Building trust is. Millions of businesses trust Microsoft with their payroll, their customer data, their government contracts, their hospital records, their national security systems. Trust like that isn't built in a year. It's built over decades, and it can disappear surprisingly quickly. Today, we're going to step into the shoes of the person making perhaps the biggest business decision in modern history. Together, we'll answer the questions every billionaire, every sovereign wealth fund, and every institutional investor would ask before even considering buying Microsoft. How much would it actually cost? Where does Microsoft really make its money? Why is it worth trillions of dollars? What could threaten one of the most powerful companies on Earth? And perhaps the biggest question of all, would owning Microsoft be the greatest millionaire decision ever made, or the most expensive business mistake in history? Before we find out, if you enjoy exploring the economics behind the world's biggest companies and billionaire investments, subscribe to Millionaire Decisions. And here's today's question. If someone handed you $3 trillion today, would you buy Microsoft, or would you invest that money somewhere else? Let me know your answer in the comments. Now, let's find out what owning Microsoft would actually cost. So, you've made your decision. Your lawyers have signed the paperwork. The world's biggest investment banks have finished months of negotiations. Governments have approved the transaction. Shareholders have accepted your offer. Today, you officially become the owner of Microsoft. Congratulations. You've just purchased one of the most powerful companies in history. Now comes the difficult part, writing the check. Let's answer the obvious question. How much would Microsoft actually cost? As of today, the company is worth roughly $3 trillion. That number is so large, it's almost impossible to visualize. So let's try. $3 trillion is enough to buy hundreds of the world's largest sports teams' company. It's enough to build thousands of modern hospitals. It's larger than the annual economic output of most countries on Earth. If Microsoft were an independent economy, it would rank alongside some of the biggest nations in the world. And remember, that's only the purchase price. Because buying Microsoft isn't like buying a house. You don't pay the asking price, collect the keys, and go home. Not even close. The moment the deal becomes public, the entire financial world reacts. Stock markets become volatile. Governments begin asking questions. Competitors prepare legal challenges. Regulators from the United States, Europe, the United Kingdom, Japan, and dozens of other countries all want answers. Because Microsoft doesn't simply operate inside those countries, it powers them. Imagine waking up tomorrow and discovering that one company controls a huge portion of your nation's business software, cloud infrastructure, government computer systems, healthcare platforms, and cybersecurity. Governments don't approve deals like this overnight. Some acquisitions take years. Others never happen at all. Not because buyers don't have the money, but because regulators decide the company is simply too important. Owning Microsoft isn't just a financial transaction, it's a geopolitical event. But let's imagine, against all odds, everything is approved. Now you face another challenge: financing. Very few people on Earth have $3 trillion in cash. Even the wealthiest individuals don't. That means the purchase would likely involve sovereign wealth funds, institutional investors, pension funds, private equity firms, banks, and perhaps even governments themselves. In reality, the largest corporate acquisition in history would almost certainly become the most complicated financial deal ever attempted. Thousands of lawyers, thousands of bankers, thousands of analysts, working for months, possibly years, before ownership changes by even a single percentage point. But here's something interesting. Buying Microsoft isn't really about paying for its buildings, or its offices, or even its products. You're paying for something much harder to measure: its ability to generate cash. Think about it. If someone offered you a machine that quietly printed billions of dollars every year, how much would you pay for it? That's essentially what investors see. Microsoft has spent decades building businesses that generate recurring revenue month after month, year after year. Unlike a traditional manufacturer, Microsoft doesn't have to convince many customers to buy the same product again from scratch. Instead, millions of businesses simply keep renewing their subscriptions every month, every year. Predictable, reliable, quietly. That's one of the biggest reasons investors value Microsoft so highly. But owning Microsoft comes with another enormous responsibility. Its infrastructure. Most people picture Microsoft as software. In reality, it's also one of the largest cloud computing companies on Earth. Behind every Microsoft Teams meeting, every OneDrive file, every Azure application, there are gigantic data centers. Buildings filled with thousands upon thousands of servers, each one consuming enormous amounts of electricity. Imagine standing inside one. Rows of machines stretching further than you can see, constantly running, 24 hours a day, 7 days a week. If they stop, parts of the internet stop with them. Keeping those facilities online requires billions of dollars every year. Electricity, cooling systems, fiber optic networks, backup generators, security, maintenance, hardware upgrades. This isn't a business you build once. It's a business you rebuild continuously. Then comes artificial intelligence. Just a few years ago, most people viewed AI as an interesting experiment. Today, it's become one of the biggest investment races in corporate history. Microsoft has committed tens of billions of dollars toward artificial intelligence infrastructure, research, partnerships, and data centers capable of training increasingly powerful AI models. Why? Because falling behind in artificial intelligence today could mean losing tomorrow's customers. That's the strange thing about owning Microsoft. You can't simply protect what you've already built. You must constantly invest billions just to stay where you are. Now imagine the annual operating budget. Hundreds of thousands of employees, software engineers, researchers, cybersecurity specialists, sales teams, lawyers, marketing departments, support staff, cloud infrastructure teams, executives. Every month, payroll alone costs an extraordinary amount of money. Then come acquisitions. Microsoft has spent decades expanding by buying other companies. LinkedIn, GitHub, Skype, Mojang, the creators of Minecraft, Activision Blizzard. Each acquisition wasn't simply an expense. It was an investment in future growth. Owning Microsoft means constantly asking yourself one question: what's the next billion-dollar opportunity? Because standing still isn't an option. And then there's cybersecurity. Every single day, hackers from around the world attempt to breach Microsoft's systems. Some are criminals. Some are organized groups. Some are believed to be backed by nation-states. Millions of attacks every day. Microsoft invests billions, protecting not only its own systems, but the businesses, governments, hospitals, banks, and schools that depend on its software. One successful attack could damage something far more valuable than money: trust. And in the software business, trust is everything. By now, you may have noticed something unusual. Unlike the car manufacturing company we discussed earlier, Microsoft doesn't need blast furnaces. It doesn't need assembly lines. It doesn't need millions of tons of steel. Its most valuable asset isn't physical, it's intellectual. Ideas, algorithms, software, artificial intelligence, innovation. Those invisible assets are worth far more than most factories on Earth. Which means the biggest investment isn't concrete, it's talent. And talent is expensive. The best software engineers in the world don't come cheap. The best AI researchers are being recruited by nearly every major technology company on the planet. Some receive compensation packages worth millions of dollars every year. Keeping those people motivated, inspired, and loyal may be one of the most important investments you'll ever make. So, let's add everything together. The acquisition itself, cloud infrastructure, artificial intelligence, cybersecurity, research, acquisitions, data centers, energy, global offices, employee compensation, legal compliance, product development, hardware, marketing, customer support. Unlike many businesses, the purchase price is only the beginning. Owning Microsoft means committing to invest tens of billions of dollars every single year just to maintain its position as one of the world's leading technology companies. And here's the fascinating part. Despite all those expenses, Microsoft continues to generate enormous profits, which raises an even bigger question. How can one company spend tens of billions of dollars every year and still remain one of the most profitable businesses on the planet? Because the secret to Microsoft's success isn't that it sells software, it's how it built an ecosystem that millions of people pay for every single day without even thinking about it. And that's exactly what we're about to uncover. You've just spent $3 trillion buying Microsoft. The paperwork is complete, the headlines have settled, the stock market has finally stopped reacting. You walk into Microsoft's headquarters for the very first time as its new owner. The elevators open. Thousands of employees are already working. Software engineers are writing code. Cybersecurity teams are stopping attacks. Artificial intelligence researchers are training new models. Sales teams are closing billion-dollar enterprise contracts. Cloud servers are processing millions of requests every second somewhere. A student is opening Microsoft Word for homework. A hospital is storing patient records on Azure. A Fortune 500 company is hosting a meeting on Microsoft Teams. A developer is uploading code to GitHub. An accountant is building a spreadsheet in Excel. A gamer is starting a match on Xbox. And with almost every click, Microsoft earns money. Quietly. Automatically. 24 hours a day. That's the first thing you learn about owning Microsoft. Unlike a factory, its products never stop working. Even while you're asleep, the business is still generating revenue. Let's start with the product almost everyone has used at least once: Microsoft Windows. For decades, Windows has been the operating system that introduced billions of people to personal computing. Every new laptop purchased by a student, every office desktop installed inside a corporation, every workstation inside a bank has a good chance of running Windows. Think about that for a moment. Imagine opening a brand new computer anywhere in the world. Before you install your favorite apps, before you browse the internet, before you play a game, the chances are you're already using a Microsoft product. For years, that simple fact became one of Microsoft's greatest advantages. Every computer sold with Windows created another customer entering Microsoft's ecosystem. And once someone becomes familiar with Windows, they're far more likely to stay. Not because they have to, but because changing operating systems takes time. Businesses don't like disruption. Neither do schools or governments. Convenience creates loyalty, and loyalty creates recurring revenue. But here's something many people don't realize. Windows isn't Microsoft's biggest business anymore. Cloud computing is. Specifically, Microsoft Azure. Imagine owning thousands of apartment buildings. Every month, tenants pay rent. Some stay for years. Some expand into larger apartments. Some rent entire buildings. Now replace apartments with computing power. That's Azure. Instead of renting homes, Microsoft rents computing infrastructure, storage, artificial intelligence, databases, networking, cybersecurity, business applications, to companies all over the world. Some customers are tiny startups. Others are among the largest corporations on Earth. Governments, banks, airlines, hospitals, streaming companies, retail giants, manufacturing firms. They all need computing power. And instead of building enormous data centers themselves, many simply rent Microsoft's. It's one of the biggest business transformations in modern history. Companies no longer buy servers. They rent computing power whenever they need it. And every month, Microsoft gets paid. Again, and again, and again. Then comes one of the smartest business decisions Microsoft ever made: turning Office into a subscription. There was a time when people bought Microsoft Office once, installed it, used it for years, That was the end of the transaction. Then Microsoft changed the model. Today, millions of people subscribe to Microsoft 365. Businesses subscribe, students subscribe, families subscribe, schools subscribe. Instead of receiving one payment every few years, Microsoft now receives recurring monthly or annual payments. That one decision fundamentally changed the economics of the business. Predictable income, predictable cash flow, predictable growth. Investors love predictability, and Microsoft understands that better than almost anyone. Now think about how deeply Microsoft has embedded itself into the modern workplace. Imagine walking into a typical office. Employees write reports in Word. They build financial models in Excel, present ideas in PowerPoint, communicate through Teams, store documents in OneDrive, manage emails through Outlook, schedule meetings through Exchange, protect company devices using Microsoft Security. Everything works together. That's not an accident. It's an ecosystem. The more Microsoft products a company uses, the harder it becomes to leave. Not because they're trapped, but because everything is connected. Changing one product often means changing 10 others. That's an incredibly powerful competitive advantage. Then, there's another business many people forget Microsoft owns. LinkedIn. To most people, it's simply a website for finding jobs. To Microsoft, it's something much bigger. A global network of professionals, hundreds of millions of users, recruiters paying premium subscriptions, companies purchasing advertising, businesses investing in recruitment software, learning platforms, sales tools, professional data. LinkedIn isn't just a social network. It's one of the world's largest professional marketplaces. And every day, that marketplace generates revenue. Then there's GitHub. If you're not a software developer, you may have never used it. But if you've ever used an app, visited a website, or interacted with modern technology, there's a good chance GitHub helped build it. Millions of developers use GitHub to write software together. Companies pay for advanced collaboration tools, security features, enterprise management, artificial intelligence coding assistance. GitHub quietly became another recurring revenue engine, and Microsoft recognized its value long before many others did. Now, let's talk about gaming. When Microsoft purchased Activision Blizzard, many people focused on one thing: the enormous price tag, nearly $69 billion. But Microsoft wasn't simply buying games, it was buying communities. Call of Duty, World of Warcraft, Diablo, Candy Crush, millions of players, millions of subscriptions, millions of in-game purchases. Combined with Xbox, Microsoft suddenly controlled one of the largest gaming ecosystems in the world. Consoles, games, digital stores, subscriptions, cloud gaming. Gaming isn't just entertainment anymore. It's another recurring business. And then there's artificial intelligence. This might become the most important business decision Microsoft has ever made. Years before AI became mainstream, Microsoft invested heavily. It built specialized data centers, expanded Azure integrated AI into Office, introduced Copilot across multiple products, partnered with leading AI companies. Why? Because Microsoft doesn't see artificial intelligence as another feature. It sees it as the next operating system. Imagine if every document you write, every spreadsheet you build, every meeting you attend, every email you receive comes with an intelligent assistant. Now imagine charging millions of businesses for that capability. That's the opportunity Microsoft is pursuing. But here's the real secret behind Microsoft's success. It isn't Windows, or Azure, or Office, or Xbox, or LinkedIn, or GitHub. It's diversification. Imagine if Windows sales slowed, Azure continues growing. If gaming struggles, enterprise software continues generating cash. If hardware sales weaken, subscriptions keep arriving every month. Microsoft isn't relying on one product. It's relying on dozens of billion-dollar businesses supporting one another. It's less like owning one company and more like owning an entire digital economy. Every product strengthens another. Every service introduces customers to the next one. That's why so many businesses stay inside Microsoft's ecosystem for decades. By now, you probably understand why Microsoft became worth trillions of dollars. It isn't because one product became successful. It's because the company built a machine that continuously creates new revenue streams while strengthening the old ones. But even machines this powerful have weaknesses. Technology changes faster than almost any industry on Earth. Governments are watching more closely. Artificial intelligence is creating new competitors. Cyber attacks are becoming more sophisticated. And one wrong decision could reshape the future of the entire company. Because history has taught us something important. No company, not even one as powerful as Microsoft, stays on top forever. And before you decide whether Microsoft is worth $3 trillion, we need to understand the risks that could threaten one of the most successful businesses ever built. By now, you've seen why Microsoft became one of the most valuable companies in history. It has dominant software, a massive cloud business, artificial intelligence, gaming, business subscriptions, professional networking, developer platforms, and enough cash flow to make most companies jealous. From the outside, it almost looks invincible, but history has taught investors one painful lesson. No company stays on top forever. Not Kodak, not Nokia, not Yahoo, not BlackBerry. At one point, every one of those companies looked unstoppable, until they weren't, which raises an uncomfortable question. Could the same thing happen to Microsoft? If you just spent $3 trillion buying the company, this is the chapter you'd care about most. Because billionaires don't lose sleep thinking about today's profits. They lose sleep thinking about tomorrow's risks. Let's start with the biggest threat: complacency. It sounds harmless. It's not. Large companies often become victims of their own success. When you're winning, it's easy to believe you'll keep winning. History says otherwise. Take Microsoft itself. Back in the early 2000s, the company dominated personal computing. Windows was everywhere. Microsoft Office was the industry standard. Internet Explorer controlled the web browser market. It looked like Microsoft had already won. Then something happened. The internet changed. Google reinvented search. Apple reinvented the smartphone. Amazon reinvented cloud computing. For several years, Microsoft wasn't leading those revolutions. It was reacting to them. Many analysts even wondered whether the company's best days were behind it. The lesson: even giants can fall behind. Then something remarkable happened. Instead of defending the past, Microsoft reinvented itself. When Satya Nadella became CEO in 2014, he shifted the company's focus toward cloud computing, subscriptions, and artificial intelligence. At the time, some people questioned the strategy. Today, Azure is one of Microsoft's biggest growth engines. Microsoft 365 became a recurring revenue machine, and the company positioned itself at the center of the AI revolution. It's one of the greatest corporate turnarounds in modern business history. But here's the important part. It succeeded because Microsoft was willing to disrupt its own business before someone else did. That's incredibly rare. Now imagine you're the owner. Could you make those same decisions? Because that's the real challenge. Leading Microsoft isn't about protecting what exists today. It's about betting billions on technologies that may not pay off for another decade. Sometimes, those bets fail. And when Microsoft makes a mistake, it isn't measured in millions. It's measured in billions. Remember Windows Phone? Microsoft invested heavily, acquired Nokia's phone business, hoped to challenge Apple and Android. It didn't work. Billions of dollars disappeared. Then there was Zune, Microsoft's attempt to compete with the iPod. Another ambitious idea, another expensive lesson. Even one of the world's smartest technology companies doesn't win every battle. Then comes another threat: artificial intelligence. Ironically, the technology creating Microsoft's biggest opportunity could also become its biggest risk. Today, Microsoft is investing tens of billions into AI infrastructure, but so is everyone else. Google, Amazon, Meta, Apple, Anthropic, OpenAI, countless startups, entire governments. This isn't just another technology race, it's becoming one of the largest investment races in history. Now imagine spending $50 billion building the next generation of AI infrastructure, only for a competitor to discover a better, cheaper approach. That's the danger. Technology changes incredibly fast, and yesterday's breakthrough can become tomorrow's outdated system. Then there's regulation. The bigger Microsoft becomes, the more attention it attracts. Governments around the world are increasingly asking difficult questions. Is Microsoft becoming too powerful? Does it dominate certain markets? Should regulators limit future acquisitions? Should artificial intelligence be regulated differently? Should cloud providers face stricter rules? Owning Microsoft means accepting that every major business decision could eventually attract political attention. When you're a local software company, few governments care. When you're one of the world's largest technology companies, everyone does. Then comes cybersecurity. Think about this. Every single day, Microsoft helps protect millions of businesses from cyber attacks. Governments, banks, hospitals, military contractors, schools, power companies. Its software sits at the heart of some of the world's most important digital infrastructure. That also makes Microsoft one of the biggest targets on Earth. Every day, hackers attempt to exploit vulnerabilities. Some are criminals seeking money. Others are state-sponsored groups gathering intelligence. A single security flaw could affect millions of computers almost instantly. Imagine waking up to discover that a vulnerability inside Windows has disrupted hospitals, grounded airlines, or shut down financial institutions. The financial cost would be enormous, but the reputational damage could be even greater. In technology, trust takes decades to build and seconds to lose. Then there's competition. Most people think Microsoft competes with Apple. It does. But that's only a small part of the story. Microsoft competes with Google in productivity software and cloud computing, Amazon in cloud infrastructure, Salesforce in enterprise software, Zoom in communication, Adobe in creative tools, GitLab in developer platforms, Sony in gaming, Oracle in enterprise solutions, and now it competes with almost everyone in artificial intelligence. Owning Microsoft means fighting multiple billion-dollar battles at the same time. Winning one doesn't guarantee success in another. And then there's a challenge many people never consider: success itself. When a company becomes worth $3 trillion, growing becomes incredibly difficult. Imagine owning a small business. Doubling your revenue might require finding a few hundred new customers. Now imagine owning Microsoft. Adding another $1 trillion in value requires creating businesses larger than many Fortune 500 companies. The bigger you become, the harder it is to grow. That's one of the greatest paradoxes in business. Success raises the standard. Every year, investors expect more innovation, more revenue, more profit, more growth. Meeting those expectations becomes harder than reaching them in the first place. Now let's step back into our story. Remember that phone call, the investment banker, the $3 trillion offer. Would you still buy Microsoft? Let's think like the world's greatest investors. They wouldn't ask, "Can Microsoft make money?" That answer is obvious. Instead, they'd ask questions like, will businesses still depend on Microsoft 10 years from now? Can Azure continue competing with Amazon? Will AI create more value than it destroys? Can Microsoft continue attracting the world's best engineers? Will regulators allow the company to keep expanding? Can management reinvent the business again when the next technological revolution arrives? Those are the questions that determine whether your $3 trillion investment grows or slowly loses its edge. But here's something fascinating. Despite all these risks, Microsoft has one advantage that very few companies possess. It has reinvented itself multiple times. From personal computers to enterprise software, to cloud computing, to subscriptions, to artificial intelligence. Each transformation could have failed. Instead, they became new chapters in Microsoft's story. That's not luck, that's leadership. And perhaps that's the greatest asset you're actually buying. Not Windows, not Azure, not Office, but a culture capable of adapting before the world forces it to. So, after everything we've learned, Microsoft begins to look less like a software company and more like a constant race against time. Every day, it must innovate faster than competitors. protect billions of users, invest in technologies that don't exist yet, and somehow continue earning the trust of the world. Because the day Microsoft stops evolving, someone else will start replacing it. And in technology, that process can happen much faster than anyone expects. Which brings us to the most important question of all. After spending $3 trillion, would owning Microsoft actually be one of the greatest investments in history? Or would you be buying one of the most expensive responsibilities ever created? It's time to make our millionaire decision. So, let's go back to where this story began. Your phone rang. An investment bank offered you something no one had ever imagined. The opportunity to buy Microsoft. $3 trillion. At the beginning of this video, it sounded like the ultimate business. A company used by billions of people. A software empire. A cloud computing giant. One of the most profitable corporations in history. Now, you've seen what really lies beneath the surface. You know Microsoft isn't just Windows, or Office, or Xbox. It's an ecosystem of businesses connected together by one thing: trust. And maintaining that trust is one of the most expensive responsibilities in the corporate world. Let's do the math. You agree to purchase Microsoft for approximately $3 trillion. That's your starting point. But the purchase price is only the beginning. Every year, you'll continue investing tens of billions of dollars into cloud infrastructure, artificial intelligence, cybersecurity, research, acquisitions, data centers, software development, employee compensation, global compliance, product innovation. These aren't optional expenses. They're the cost of remaining Microsoft. Imagine buying the world's fastest race car, then discovering you need to replace the engine every year just to stay competitive. That's what owning Microsoft feels like. The company can never stop investing, because the moment innovation slows, someone else starts catching up. Now let's look at the reward. Microsoft has become one of the world's most profitable businesses because its revenue isn't built on one product. It's built on thousands of decisions made every second. A company renews Microsoft 365. A startup launches its app on Azure. A developer subscribes to GitHub Copilot. A family upgrades Xbox Game Pass. An enterprise signs a multi-year cloud contract. A school purchases Microsoft licenses. A corporation expands its cybersecurity services. One transaction isn't impressive. Millions happening simultaneously, every single day, creates something extraordinary. Cash flow, reliable, recurring, global. That's the dream every investor chases, and Microsoft has spent nearly 5 decades perfecting it. But here's the lesson I think surprises people the most. Microsoft didn't become worth trillions because it built the best software. It became worth trillions because it built products people couldn't imagine working without. Think about your own day. How many Microsoft products have you already used? Maybe Outlook, Excel, Word, Teams, Windows, OneDrive, LinkedIn, perhaps without even realizing it. That's the power of integration. The company quietly became part of everyday life. When your business becomes infrastructure, customers don't ask whether they'll use you tomorrow, they assume you'll already be there. And that's one of the strongest competitive advantages any company can have. Of course, nothing lasts forever. History doesn't reward companies that become comfortable. It rewards companies that continue reinventing themselves. Microsoft understands this better than most. The company has survived multiple technological revolutions: the rise of the internet, mobile computing, cloud computing, artificial intelligence. Each time, it adapted, not perfectly, not without mistakes, but successfully enough to remain one of the world's most valuable businesses. That ability to evolve may be Microsoft's greatest product of all. Now, let's answer the question every billionaire asks before writing a check. If you had $3 trillion, would Microsoft be the smartest place to invest it? The answer depends on what kind of investor you are. If you're looking for a quick return, probably not. At this scale, growth becomes incredibly difficult. Adding another $1 trillion in value isn't impossible, but it requires creating entirely new industries. If you're hoping to buy the company, cut costs, and double your money in 2 years, Microsoft isn't that kind of business. It's already highly optimized. The easy opportunities disappeared long ago. But if you're thinking like the world's greatest long-term investors, the conversation changes. Because Microsoft possesses something very few companies have: a diversified ecosystem, strong recurring revenue, global brand recognition, world-class leadership, massive free cash flow, continuous innovation, and perhaps most importantly, the financial strength to invest through almost any economic downturn. That's incredibly rare. Here's something fascinating. When people think about owning Microsoft, they imagine owning software. In reality, you're owning one of the world's largest innovation engines. Every year, thousands of engineers wake up asking one question: what's next? Some ideas fail, some disappear quietly, others change the world. That constant search for the next breakthrough is what keeps Microsoft relevant. Not one product, not one executive, not one acquisition, but a culture that understands tomorrow's success depends on today's willingness to change. So, let's make our decision. Millionaire Decision Scorecard. Investment required, 5-star. One of the most expensive businesses on earth. Profit potential, 5-star. Among the strongest recurring revenue models ever created, supported by software, cloud computing, subscriptions, and enterprise services. Risk level 3-star. Competition, regulation, cybersecurity, and technological disruption are constant threats. But Microsoft's diversification helps reduce many of those risks. Operational difficulty 5-star. Managing a global technology ecosystem with hundreds of thousands of employees and billions of users is one of the most complex leadership challenges imaginable. Time to recover investment 3-star. Owning Microsoft is a long-term investment, measured in decades, not years. Patience is essential. Future outlook 5-star. Artificial intelligence, cloud computing, cybersecurity, and enterprise software continue to position Microsoft at the center of the digital economy. While no company is guaranteed to remain dominant forever, Microsoft has repeatedly shown an ability to adapt. Final verdict. So, would owning Microsoft be a millionaire decision? Without question, yes. But perhaps not for the reason most people think. It isn't because Microsoft is the biggest, or because it's worth trillions, or because it generates billions in profit every quarter. It's because Microsoft has mastered something almost every business struggles to achieve. It turned one-time customers into lifelong customers. It transformed products into ecosystems. It replaced unpredictable sales with recurring relationships. And it built a business that evolves alongside the technology shaping our future. That doesn't make Microsoft invincible. No company is. But it does make it one of the clearest examples of how innovation, discipline, and long-term thinking can create extraordinary value. If you were fortunate enough to own Microsoft, your greatest responsibility wouldn't be protecting today's profits. It would be making sure the company is still indispensable 20 years from now. Because in technology, standing still is the fastest way to become irrelevant. And Microsoft has spent nearly 50 years proving that survival isn't about being the smartest company in the room. It's about being the company that's willing to learn, adapt, and reinvent itself before the world forces it to. That's why Microsoft isn't just one of the most valuable businesses in history. It's one of the most remarkable business decisions ever made. If you enjoyed today's Millionaire Decision, don't forget to like this video and subscribe for more deep dives into the economics behind the world's biggest companies, industries, and investments. And now it's your turn. If you had $3 trillion to invest, would you buy Microsoft, or would another company give you a better long-term return? Tell us your decision in the comments below. And if there's another business you'd like us to analyze next, let us know. Until next time, make smarter, millionaire decisions.